Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, December 11, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Today is called the CPI Bounce Back Day in the trading parlance. Remember, they're above all the moving averages. The trend is your friend. The larger time frames dominate everything. The trend dominates everything. And therefore, we've been talking about this. This was a pullback in the midst of an uptrend. The target, and it hasn't changed until or unless they start closing above the previous high. The target on this pullback was around 600, the most recent breakout area. Keep in mind, tomorrow is the PPI data shuffle. Sometimes the CPI, the market will pop, and then it will drop on the PPI. We don't know. Maybe we get follow through, and if they do make a new high, at least for the time being, the downside is off the table. Let's talk downside for a moment. This is an important conversation, and it comes from what I used to call the email indicator. Now I call it the chat box indicator. I'm talking about things that are asked of me, questions that are asked in the live room. And I could tell what the sentiment is of traders when I keep getting asked the same thing in relation to where the market is and what I think is going to happen. So some of the questions that I've been getting asked over the last couple of days leads me to believe I have a pretty good source that there are a lot of traders short looking for downside in the market. And if I'm saying the target on the downside is roughly 600 give or take slash the 20-period moving average, here's what that means in layman's terms. Here's what that means in David Frost terms. Here's what it means in trader slash running this as a business terms. It means we're not sure they're going to get to 600, but what we are pretty sure about, and this is a probability business, we're pretty sure that there's support in and around that 600, maybe a couple of dollar lower area around the 20-period moving average. We're pretty sure that when and if they get down there anytime soon, there is garden variety of chart support at minimum of an intraday perspective, but more likely from a swing trading perspective, several day type of bounce back type of situation, pullback in an uptrend-ish situation. Just to make sure we're all clear and all on the same page. We all need to put that one in our pipe and smoke it. We take a sidestep over to Hershey for a second. HSY getting a buzz cut at the opening bell. Traders in the live room were told about a spike of 175 should be good for a bounce back type situation. As you can see, they got right up here, making a high of 182.59 in a matter of minutes. That deserves a how you doing? But wait, there's way more. About HP. This is right out of the Lazy Swing Trader Automagical Algo system. 32.58. This was purchased on Friday, December 6th. About 3 trading days ago. First profit taken up over 6% from entry today. The rest is what we call a risk-free emotionless trade. Lazy Swing Trader Automagical Algo system. How does it work? Traders get access to a watch list. You see what's coming close to an entry target, whether it's a short or a long. An alert comes out. It comes to your phone via text or email and or both. When the price target or entry target is hit, what happens next is traders get the profit target and the stop loss just in caser right out of the chute So traders have everything they need, which is why it's called the automagical algo system. We'll leave S&P land or SPY land with the trend is your friend. You had an up day today, up 7 or 0.8%, about $4.50 in the spider. The trend is, in fact, your friend. What happened inside the numbers? Well, the market took off after the CPI data release at 8:30 a.m. Eastern Standard Time, so we don't need the real early stuff. We've got to have the updated stuff. So what we had was 604.65 as a new pivot. If above, the door opens for the next number in the sequence, 606.10. You can forget the pivot. She just kept going in the pre-market all the way through. 606.10 became the next target. You can see here on the bullseye or 1 penny short, 606.09. No accidents or coincidences, but it doesn't take long for them to bust right through 606.10. Let's see what else we got. And as you can see, still before the opening bell, the door begins to open, if above, for the next leg higher towards 607.60. As you can see, they even got above that, but then it becomes support. These are important numbers. So if price does get above, they become support. And you can see right at the end of the day, they ran back below in a hurry in the last candle or two of the day. Don't forget, that was a target. If above on candle closes, the door begins to open for another leg higher towards 607.60. In a bullish tape, it's no wonder they were able to get higher than the target. But the target still became an important number, was an important number, and became support until the end of the day. What I urge traders to do, if they're intraday traders, is pause the video, read the notes, go back to the chart, and double check the work. Everything traders need to be successful is in here each and every day, including stocks on the move. We had 3 candidates today, SMCI, Sienna, and Play, which is Dave & Buster's. Play didn't hit its entry objective, but Sienna and SMCI did. So let's take a look at those charts. Made an error there. It was Play and SMCI, not Sienna. Sienna did not get to its entry objective, but Play did, and you can see $30.90 was on the board at 0 dark 30. They bounced around. They gave you the trade for sure. It was a base hit, and guess what base hits do? They put you in the Hall of Fame. Later in the day, they leaked away, but the trade is in the morning activity, the morning business, when there's activity in the market. It's called participation. And it's definitely not a participation trophy. The market is a meritocracy. About SMCI getting a buzz cut at the opening bell. The numbers on the board with 38.75 and 36.90. Well, guess what? It opened below the first one, so it's off the board. It doesn't exist. They came in and spiked the second number, ripped it back up in the other direction. Nice trade in SMCI. It all happened early. They funneled around with the number, and then they went back up in the afternoon, but the trade happens early. Plenty of traders participated in the live room with the spike of 36.90. Nice trade. And let's not forget the list of markets that we cover. Plug some of these numbers in and see what happened today around the numbers. Each and every day. Not every market will hit every number. These are important numbers on the board for a dozen markets for Inside the Number and live room members. How you doing? What's going on over in Camp IWM? So they were up $1 today, about 0.4, 0.5%, almost 0.5%, almost. They're just riding for now the 20-period moving average. Well, notice what happened at the end of the day. Pretty sharp sell-off at the end of the day in the last 10 minutes of the trading session, right into the closing bell. Above all the moving averages, the trend is, in fact, your friend, but she's teetering. Had an opportunity to have a nice day today, and ended up with what we call in the trading business relative weakness. Not by much against the S&P, but yes, relative weakness nonetheless. My favorite market-leading indicator, I'll mind you. Speaking of which, remember this one. So yesterday, my second favorite market-leading indicator, the folks down at the transportation department, this is my favorite canary in the coal mine, yesterday had an up day against all odds with everything else down. Today we had a pop higher in the S&P and other markets, but now we had a down day in the transports. My second favorite market-leading indicator, a number one canary in the coal mine. Down about 0.5%, about $95. Is this a retracement of yesterday's low, or do they get below yesterday's low and open the door below the 50-period moving average down to the gap here or lower? These charts look slightly different. This is the IYT, which is supposed to track the transports. Doesn't look identical. In fact, you could see where today's close was relative to yesterday's candle. And when you go back to the actual index, the actual transports, the IYT, is a derivative of the transportation index or average. But my point is, write down 69.75 on a sticky note if you're a transport follower. And if they spike this gap here, that's an area I would expect a bounce back in the other direction. Write that down. Put it on a sticky note. What about the Q people? Up over $9 today, almost 2%, 1.8%. You have new highs. Here's what the weekly chart looks like. Absolutely nothing wrong here. Where does the 533.15 come from? It comes from an automagical calculator situation. Not saying they have to get there, but it is a target if they're close, and not saying they will, but they likely will have a difficult time waltzing right on through there, kind of like a whistling past the graveyard situation. As of today, new highs. Trend is your friend. Nothing wrong with the Qs. Getting a little bit far from home base. Likely need some kind of a pullback or at least a few days of sideways situation coming to a chart near you. What about the XLF? Not participating in today's rally, up 10 cents, 0.2%. 49.90 is an important place. They're 10 cents below it. That's not a federal case type situation, but the longer they stay below, the more likely they are to leak away. If you lose the financials, you're going to lose other sectors around the marketplace. S&P, Dow, Qs, and such will follow suit. What about the SMH? Up almost $6 today, 2.5%. So we have some divergences out here. SMH is a pretty good proxy for the tech space. Qs are rallying, SMH is rallying, nothing wrong over there. We look over at the transports and the small caps, and there's some warning signals. There's some flares up in the air. Let's see what PPI brings tomorrow if we get another positive reaction / goose operation from the PPI, or we get a rug pull event and a reversal of today's CPI data release. And that's data, DATER, release. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.